You just got home from work. You open the mailbox like any other day, except today you have a letter from the IRS. Or, even worse, the mailman has you sign for a certified letter. You're like, am I being audited? Am I going to jail? Do I owe a boatload of money? Over the years, I can't tell you how many clients have come into my office with a stack of unopened IRS mail. They have letters and notices that have come to their home or their place of business over a long period of time, and none of them have been opened. So my goal for today's series of videos is to, one, help you understand some of the more popular notices and letters that you might receive from the Internal Revenue Service, and two, to help you understand why it's important for you to open those letters and read them as soon as they arrive. I just got a letter from the IRS. That's the topic of today's series of videos on the other side of the intro.
1877 Levy King, L-E-V-Y Levy King, 1877 Levy King, LevyKing.com.
What's up, you guys? I'm Corey Hankerson from Legacy Tax and Financial Planning, aka the Levy King. IRS took your check, call the Levy King, I'll get it back. 877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare: Insider Secrets to Beat the IRS and Reduce Your Tax Debt. And I want to give you a copy of my book for free. I want you to go over to endthetaxnightmare.com, plug in your name, your email address. You can download a copy of the book for free. Inside the book, you're going to learn how to release IRS liens and levies, how to establish the payment plan that you want, not the one that they want, and how you can potentially settle your tax debt for less than you actually owe. Just jump on over to endthetaxnightmare.com, plug in your name and email address. You can download the book for free. Before we dive into today's video, if you haven't already done so, I want you guys to follow us on social. We're on Facebook. You can also find me on Instagram at Ice Cold Tax Pro, and of course right here on YouTube. If you haven't already done so, please subscribe to our channel. Also hit that like button and that notification bell so YouTube will let you know each and every time we drop a new video. Okay, so you just got a letter from the IRS. You're like, oh my God, what am I gonna do? So in this video series, I'm gonna talk about some of the various letters you might receive during the different stages of an IRS case, right? There's the collections process. Before that, you have examinations and et cetera, right? So I'm going to talk about the various stages of an IRS case, whether it begins with an audit, or simply the filing of a tax return, or a notice that you have not filed a tax return, right? These are all ways that an IRS case can start. So I'm going to talk about the various notices that you might receive at different points in the process and help explain what those letters mean. Okay. The reason I want to do that is because at some points in the game, particularly early on, you can do a lot to help yourself by avoiding the IRS issue before it becomes an issue. You know, they say that an ounce of prevention is worth a pound of cure. So sometimes you can prevent a problem when it's just a little itty bitty problem, before it becomes a great big old problem that you then have to hire someone like myself to help you solve. Not that I don't want the business, but I'd like for you to be able to do some of these things on your own without going through a lot of time and expense. Okay? So the first thing here, IRS problems typically start in what's called the examination phase, right? Examinations is when they're examining your account or your return. In other words, you're either being audited or you have filed a tax return, okay? So we're gonna discuss what happens in the examination stage and talk about some of the notices and letters you might receive there, right? Here we go. Okay guys, the first notice we're gonna talk about is a 3254 request for examination appointment. When you get this, you're being audited, okay? The IRS manages or conducts audits either in person or via mail by correspondence, right? So you're going to receive a notice from the IRS. That 3254 notice that you receive from the IRS is going to either tell you whether this is going to be a mail audit, in which case they're going to ask you to mail them in certain documentation to substantiate items that are on your tax return, or if it will be an in-person audit or a field audit, which is not good. In which case they're actually going to come to your place of business or your home and examine your documents and records physically at your location. The correspondence audit is by far the more common of the two, but you know, field audits do still happen on occasion. A field audit tends to be a little bit more in depth. Those are more often done with businesses as opposed to individuals, in my experience. Okay. The audit is going to give you a set period of time in which the audit notice, is going to give you a set period of time in which to respond and let them know, hey, this date or time doesn't work for me for whatever reason. And if you have a good reason, you can tend to have the ability to reschedule the audit for a better date and time. Okay, the next notice that we're going to talk about, we're still in the examination stage, is the 4549 Income Tax Examination Change Notice. You're getting this letter, also known as a 30-day letter, because the IRS has found, or disallowed rather, some of the items that you put on your tax return. And the reason that they've done that is because some of the information that you provided doesn't match the information that they already had, or that they were provided by a third party, like a bank or an employer or something like that. So they found something on your return and they're disallowing it. And they're sending you this 4549 to basically inform you that, hey, we're disallowing these items on your tax return. If you disagree, you have 30 days in which to respond. If you do nothing, then they're going to go ahead and make the change on their end, and it will become an assessment at that time. Next notice is the 531T, which is called the Notice of Deficiency, which is known as a 90-day letter. Okay? So the 90-day letter is a statutory letter. The IRS is required by law to send this notice to you. It will often come by certified mail. The IRS, this notice will tell you that, hey, we have made changes to your tax return. You now owe additional tax. If you disagree, you have 90 days in which to appeal to the United States Tax Court. If you want to do that, you can challenge the IRS's assessment at the tax court as opposed to challenging it directly with the IRS itself. You can go right in the tax court and challenge it there. The benefit of going to tax court as opposed to one of the other courts is that at tax court you don't have to pay the tax in advance before you challenge the IRS's ruling or assessment. You could take your case to the U.S. Court of Appeals, U.S. Court of Federal Claims if you wanted to do that. But if you did that, you would have to pay the tax in advance and then sue the IRS to get your money back. When you go to tax court, on the other hand, you don't have to pay the tax first. You can simply file your petition in tax court, and then once the case is resolved there, then you'll either pay or get your refund, right, as the case may be. So that's one of the benefits of doing it that way. Your case starts with the tax return, and it's going to end up with this 531T letting you know that you have 90 days upon which to get into tax court. If you don't do that, if you don't use your 90 days wisely, then the IRS's decision becomes final, sort of final, and then you move on into collections, right? And we'll talk about what happens with collection notices in a future video. Okay, next up is the CP2000. It's one of the most common notices that I see in the tax practice. You're getting this because you omitted certain information off of your tax return, and the IRS is proposing an increase in the tax that you owe or a decrease in the refund that you are due because you missed some information. For example, maybe you received several W-2s or several 1099s, as the case may be, and you forgot one. Or maybe when you were inputting the information from your W-2 or your 1099, you missed a digit or you added one digit too many. Either way, it happens. CP2000 is not really a big deal unless you make it a big deal, right? So the notice is going to say, we're proposing that we change your tax return, and they're going to tell you why, right? They received this information from your employer or from whoever paid you, and you put this information on your tax return. The two doesn't match. We're proposing a change. If you disagree, write why you disagree, write on the note, send it back to us. If you do nothing, however, the change that they're proposing will become final, right? So the CP2000 is really not a big deal, but your failure to respond to it will make it a big deal. So after that CP2000 comes the CP3219, the Statutory Notice of Deficiency. This again is a 90-day letter, just like we talked about with the audit 90-day letter. This one has to do with the increase or decrease in the amount that you claimed on your tax return. Essentially here, you're getting this 90-day letter because they sent you the CP2000 proposing an increase or decrease in the amount of tax that you're owed, or the refund that you're due, and you failed to respond. You ignored it. You didn't take action. You didn't follow up in the timely period of time that you were allowed in the CP2000, or you did, and your argument was unconvincing. They still think that the change that they're proposing is a just one, right? So now they're sending you a CP3219, and this one says you have 90 days to appeal to the tax court if you don't like our decision, and if you don't do so, then the change that we're proposing will become permanent. So at this point, they've made the change, right? The CP2000, they were proposing the change. With the 3219, they went ahead and made the change. Now they're saying if you still disagree, you have 90 days to appeal. If you don't appeal, the change effectively becomes permanent. You now owe the tax, and the whole situation moves on to collections, right? So that's what happens there. In collections, we're going to talk about liens, levies, wage garnishments, etc. That follows this, right? So that CP3219 is one of your final opportunities to protest the tax that the IRS is saying is due before you will eventually move on into collections and end up talking with a fella like myself. All right. So with the notices that we've talked about before have all been because either you filed the tax return and the IRS disagreed with the information that you provided on the return, or you were audited and throughout the course of the audit, the IRS finds that you either owe more tax or you owe less of, you're due less of a refund. The notices that we're going to talk about now have to do with non-filers, right? What if you simply don't file a tax return? What happens then? Well, one of the first notices that you're going to get is a CP259. The 259 is a nice, warm, and friendly letter. It just basically says, hey, we noticed you haven't filed a tax return. We think you're probably required to file a tax return. Why don't you go ahead and file one? Okay? Nice letter, non-threatening, no big deal, right? The next notice you're going to get is a CP516. It's another reminder, and it literally will say, hey, we haven't received your return yet. Go ahead and file a tax return. Next notice you're going to get is a CP518. It's a little more serious and stern in tone. It says, this is your final notice. This is your final warning that you're required to file a return. Go ahead and file a return. The next note you're going to get is the CP2566. It essentially says, hey, you've been ignoring us. We've sent you several notices. You haven't responded to either of them, nor have you filed the tax return that we have determined you are liable to file. So what we're going to do is file a return for you. Here's what we propose based on the other sources that we have. Here's what we think you owe. Now, let me take a step and explain that. See, the IRS has most of the information that they already need to file your tax return. Number one, they have the previous returns you filed, so they know a good deal about you and your personal situation, how many kids you have and all that stuff. They know most of those things. But beyond that, when your employer gives you a W-2, they also send a copy of that same W-2 to the Internal Revenue Service. So they know what you've made. They have access to most of your banking information, so they can see what's going in and out of the account if they really care to look. When you receive a 1099, they have that. Your 1098s, and et cetera, et cetera. So they have most of that information. So they know when you're liable to file a tax, when you're required to file a tax return. So this final notice is saying, hey, you haven't filed. We know that you're required to file. And so here's what we are proposing. If you don't file, we're going to go ahead and file a return for you. And here's what you are estimated to owe. That's the 2566. The next notice that you'll receive in this long series is the 3219N, right? The 3219N is saying, hey, you haven't filed. We've sent you several notices explaining that you are required to file a tax return. You basically ignored them all. So we have proposed, we've done a substitute for return for you. Now, what a substitute for return is when you haven't filed a return, the IRS has warned you that they were going to do this, and now they went ahead and filed a return on your behalf at the highest tax rate possible. They file it single, no dependents, exemptions, deductions, nothing like that. Essentially, you're going to get an inflated balance due or a severely reduced refund. And in fact, it's usually just going to be a balance due, right? You're going to end up owing more in taxes than you would have owed if you had simply filed the tax return yourself. That's what an SFR, or substitute for return, works. This isn't good, right? So if you don't file a tax return that you're supposed to, they're going to file the return for you. You're going to end up with a balance due, right? So this means that, again, you won't get any of the exemptions, deductions, and credits that you would have gotten before. From here, you'll have 90 days, once again, to appeal to the tax court, or the SFR becomes final and you go into collections. If you're receiving a bunch of IRS notices and letters, particularly if you're receiving certified notices or letters, and you find them confusing, you're not quite sure what the deal is, or maybe you feel overwhelmed or intimidated in dealing with the situation, you really need to either just get up the nerve to jump on the phone and call the IRS and work out a resolution to your situation, or hire a tax professional such as myself or one of the others out there to help you resolve your case. It's not going to go away on its own. And one of the biggest mistakes you can make is ignoring the numerous letters that the IRS is sending you. If you have a complicated situation, you probably really do need to hire a tax professional to help you resolve your situation. Like the folks here at Legacy Tax, right? Give us a call and we'll help you with your situation. We work with the IRS every single day. We are familiar with the Internal Revenue Code and the rules and regulations that surround IRS collections and the IRS procedures, right? So we can help you and use that knowledge and experience to defend you and make sure that you don't pay any more than you absolutely have to pay, right? You can reach us at